Hello guys and welcome to Money Journey. 2022 has been a difficult year, and if you are invested in the stock market, you know what I'm talking about. Uh, Unless you are overweight energy or some industry on the healthcare sector, you probably been down a lot, as do I. My portfolio has been down a lot, and I know it's difficult to see that. Um, but if you have a long-term horizon, a long-term investment mentality, this can be an opportunity, and you should be happy to see the prices going down. So I know sometimes the stock market is the only place when you see something on sale and you don't want to buy it, because we have to train our mentality to look for opportunities like that. But if you have a long approach, a long-term mentality, you have to see it as a good opportunity. So 2022 has been a terrible year for the stock market. S&P 500 is down almost 20%. Dow Jones is down almost 10%, which is good after all the things that happened this year, in my opinion. And Nasdaq is down almost 24%. So what happened in the past or this year to so we had a bad year like this? We have been on an incredible run since 2008. We have been going up and up and up. We have had some awesome years, especially 2021, 2020, even with COVID happening. So we have been in a good run, and this might what might happen is that the stock market is overvalued, in my opinion. Even now, when we are down 20% this year in the S&P 500, we are still overvalued, but we can still find some opportunities there and making some money. It was going up because of the all the stimulus the Fed and the US government added to the market, so they could boom the economy, and that had made the prices going up, salaries going up, price of food going up, and that's a problem for the economy, because when we have high inflation, the economy can't hold, the salaries can't hold, and it's far worse for the economy and the US citizen to have a high inflation than it was to have a higher rate. So the Fed started to increase the Fed funds rate. So this has been one of maybe the fastest rate increase in the history. We have started with close to 0% rate, and we ended this year at 4.5%. This has been difficult, and the economy is now maybe starting to slowing down. I think, in my opinion, we will see it in the next year. We peaked in June in the US with a CPI at 9.1%. After that, we have seen inflation coming down. We ended the year with a CPI of 7.1% in November. Not end of the year, but the last report was in November at 7.1. This decrease in inflation has been good and steady. This has been good news for the economy, and the stock market has revealed some optimism in this case, which is important. Inflation is it's our main problem. Fed has increased rates to combat inflation, and it's more important to bring down inflation than any other thing at this moment. I agree with the Fed. They started late, so they let the inflation coming up, but now they are in a good path, and I think they will do it well. We are at 4.5%. The Fed said that they will continue to increase, but small increases. They might go to 5.25%. If the inflation continues to go down, as we have seen in the last months, that might be good. The Fed said the market is expecting rate cuts in the end of the next year, but the Fed said that will not happen. But let's see. I agree with the Fed. In my opinion, they need to maintain the rates higher, so that what happened in the 70s with Paul Volcker, when the inflation started to go down, they immediately had some rate cuts, and after some time the inflation started to go up again, and that was a bigger problem than having higher rates and inflation going down. So I think the Fed know what they need to do, and in my opinion they are doing good, even as this is bad for the market. I don't care, but in the long term I think we need to have some low inflation, and that's good for the market in the future. So let's see what will happen. Maybe they will maintain their rates at 5%. They will not have the need to increase it even more. So if the inflation continues to go down at this rate, we might be close to the end. To sum up, this year has been difficult, as we have talked earlier, and the S&P 500 is close to bear market, minus 20%. It was the worst year since 2008. The markets are still overvalued, but without the problems that happened this year, I think we are closer to the end, but we can talk about that in the next video. So till then, don't worry, it's normal. Markets don't always go up, as some people say, and it's normal having some down years. One thing, in the stock market, it's really rare to have two down years in 2 down next years, so maybe it's a good new for the next year. I don't know, I don't believe in that. I know next year it can be positive, can be negative. I will talk to you about my base case and what will happen, or what I think it will happen. So it will be a result of inflation going down or not going down, rates staying close to 5% or going even up, or maybe the Fed start cutting rates in the end of the year, which is bullish for the stock market. I know we might see the economy going down, and we might have some recession. I don't know, earnings can be down, so it will be bad for the stock market. A lot can happen, it will depend on these 3 things, and let's make another video talking about that. So I hope you enjoyed, and that was our 2022 year review. So be careful, and bye.